All right, let's dive right in. We're tearing down India's 2026 union budget. Now, I know it's this huge, kind of dense document, right? But don't worry, we're going to cut through all the noise and get straight to what it actually means for you and for the country as a whole. You know, when you hear national budget, it can feel a little abstract. Just a bunch of numbers and dry policy announcements. But here's the thing. The real question we need to answer is, how does this whole document actually hit your wallet? How does it change our country's economic game plan? That's what we're here to figure out.
So, here's how we're going to break it down. First up, we'll ask, is this a budget for you? Then, we're going to decode some pretty specific changes to your taxes. After that, we'll zoom out a bit and see how India is basically gearing up to fight a global trade war. And finally, we'll pull it all together to see the big picture. Sound good?
Okay, let's get into it. First up, taxes. Now, you might be thinking this year's budget feels a little quiet compared to previous years. You know, no massive, sweeping reforms. It's more about small adjustments. But, and this is a big but, don't let that fool you. These little tweaks are designed to have a huge impact on how you and I invest our money.
So what's the government really targeting here? Well, they're looking at a very specific and, let's be honest, a very hot corner of the stock market: futures and options trading. The official line is that they see a bit too much risky speculation happening, so they're stepping in to cool things down. But what in the world are futures and options anyway?
Let's break this down with a quick example. Okay, imagine gold is trading at, let's say, 60,000 rupees for 10 grams today. A futures contract is basically you agreeing to buy that gold 1 month from now, but at today's price of 60,000. Simple, right? If the price jumps up to 65,000, hey, you've made a nice profit. But, and here's the catch, if it drops to 55,000, well, you're still locked in. You have to buy it at 60. It's a mandatory deal, no backing out.
Now, options are a bit different. The keyword here is, well, option. You have a choice. So you might buy the right, not the obligation, to purchase a stock at 100 rupees next month. For that right, you pay a small fee, maybe 5 rupees. Now, if that stock shoots up to 120, you go ahead, you exercise your option, and you pocket the difference. But what if it drops to 80? You can just walk away. The most you lose is that small 5 rupee fee. See the difference? It's a choice, not a command.
So how exactly is the government planning to cool all this down? Simple. They're making it more expensive. Check this out. They're hiking something called the Securities Transaction Tax, or STT. It's a tiny tax you pay on every single trade. For futures, it's more than doubled. And for options, they've streamlined it to a single higher rate. The goal here is pretty clear. Make that rapid-fire speculative trading just a little less attractive.
But hey, it's not all about pumping the brakes. On the flip side, while they're discouraging some types of trading, the government is rolling out the welcome mat for another kind of investment: foreign money. I mean, with all the economic uncertainty in the world right now, attracting capital from abroad is absolutely crucial to keep our economy humming.
And they're not being shy about it. They're basically throwing the doors wide open. Get this, the investment limit for a single foreign investor in an Indian company, it's just doubled, from 5% up to 10%. And even bigger, the total cap for all foreign investors combined in one company has jumped from 10% all the way to 24%. That is a massive signal to the world that India is open for business.
Okay, let's shift gears to something that could directly help a lot of families out there. If you've ever had to send money abroad, say for your kid's education or for medical treatment for a loved one, you're going to want to hear this. The government is cutting a pretty significant upfront cost.
So, what we're talking about is the tax collected at source, or TCS. It used to be that a 5% tax was collected right up front on these payments. Well, that's now been slashed to just 2%. Now, 3% might not sound like a world of difference, but think about it. On a massive college tuition bill or a hefty hospital fee, that's a lot less cash you have to fork over right at the beginning, exactly when you need it the most.
All right, let's zoom out from our personal finances and look at the bigger picture, the national level. Because the second major story of this budget is really about defense. It's about how India is building a shield against a pretty turbulent global trade environment.
So what's the problem we're trying to solve? Well, the core challenge is this. The United States has slapped tariffs, some as high as 50%, on all sorts of goods. What that does is make Indian products way more expensive for American consumers. And that is a direct, serious threat to our export industries and, of course, all the jobs that come with them. And look, this isn't just some abstract economic theory. This is real. Take a look at this number, 466. That's not just a number. That's how many export-focused businesses have had to shut their doors recently because of all these disruptions. We're talking about real people, real job losses, and a direct punch to the gut for our economy. So the big question is, what's the plan?
The government has come back with a very clear 4-point defense plan. It's really a mix of things, providing immediate relief where it's needed most, making our key sectors more competitive on the world stage, and, this is crucial, building long-term self-reliance. Let's break down each one of those points.
First up, they're throwing a lifeline to our Special Economic Zones, or SEZs. Now, these are areas that are designed purely for exports. So, with international orders drawing up, what do? Well, the government's given them a special, temporary permission slip to sell some of their stuff right here in India. It's actually a pretty clever way to keep the factories running and, most importantly, prevent people from losing their jobs. Okay, points 2 and 3 are all about making our stuff more competitive. The logic is really simple. If other countries are adding taxes to your products, you have to find a way to bring your costs down at home to stay in the game. So, the textile sector is getting help to upgrade old machinery. And other key industries like seafood and leather will now pay lower taxes on the raw materials they need to import. It's all about leveling the playing field.
Now this fourth point, this one is arguably the most strategic of them all. The government is pumping a massive 10,000 crore rupees into a new national scheme. And what for? To build shipping containers, right here in India. Now that might sound a little random, but why is this so incredibly important?
This chart right here, this tells the entire story. Just look at that. China produces roughly 95% of the entire world's shipping containers. 95%. That gives them an unbelievable amount of control over global supply chains. So by investing this heavily in our own manufacturing, India is taking a monumental step toward breaking that dependency and securing its own trade future. This is a huge play for self-reliance. So, we've looked at the details, the tax tweaks, the trade defenses. Let's pull it all together. What's the big picture here? What are the main takeaways from this year's budget? You know, when you connect all these dots, a pretty clear strategy emerges. At home, they're using these small, targeted tax tweaks to guide investor behavior and manage risk. And abroad, they're playing defense, putting up a shield to protect our industries. And woven through all of that is this powerful push for self-reliance, especially in critical supply chains like shipping. So the big theme this year? It isn't radical reform. It's all about building stability and economic resilience.
And that leaves us with one final, big question to chew on. Does this budget signal a fundamental shift in strategy? Are we seeing a move away from the era of big, ambitious reforms and into a new phase? A phase of strategic defense, all about building an economy that can weather the storms of a pretty unpredictable world. That's something to think about. Thanks for joining me for this breakdown.